Oh, I like that stock and I'll buy that. Oh, I like that stock and I'll buy that. What is that? What are you guys doing? You're literally gambling without prior research. It's like betting without checking your hand in poker. If you don't know your hand and you're just going all in, you're stupid. Hey all, Choiboy here. Welcome to the first video of 2022. Hope you all had a Merry Christmas and a Happy New Year. Such a hot summer in Auckland recently. It's getting hotter and hotter and I didn't have much to wear because everything's in the wash. I couldn't wear a singlet in the video because I'm not shredded enough, so I decided to wear this Hawaiian shirt that I wore today because why not? Hope you like it. I had a thought for quite some time on what I should talk about for the first video of 2022. I wanted it to be a bit meaningful and something that might benefit a lot of people, not just beginners, but it will benefit beginners over advanced people because advanced kind of investors and whatnot would already have done a lot of the things I'll be talking about today. So today's topic is things to do before investing in 2022. Alright, 2022, very special year. Hope everyone makes money in the stock market, crypto market, or property market, but we do need to do some prior preparation on ourselves and our own personal finances before we become a great investor. So these are things you should be doing before investing. Just a disclaimer before we get into it. I'm not a financial advisor. Please take everything I say with a grain of salt because I don't really know what I'm doing half the time myself. I'm an amateur just like you guys that's just been in the markets for quite some time, sharing my own opinions. Do your own research before you buy or sell anything I talk about in this video. Thank you, and we will get into my lovely presentation I made in Prezi. First thing you should be doing before investing is budgeting. Okay, so budgeting is the first step for anyone regardless of if they want to invest or not, if you're earning some stable income. Now, why do you want to budget? Because you just want to be sustainable, okay? Financially sustainable. You don't want to go under because you raked up a lot of personal debt or credit debt, whatever. You shouldn't be raking up debt for yourself to buy unnecessary things. And that's what a lot of people do in their 20s and 30s and even their 40s maybe. This is the thing. If you budget, you don't even have to invest to be in the top 10%. Top 10%, I made it up, but roughly talking about the global status, most people don't even budget properly. For what I can see, just by looking at the internet, even around me, I can see that a lot of people don't have good budgeting kind of habits, let's say. Budgeting is important because it kind of tells you if you're eligible to invest or not. Okay, so if you don't budget, why invest? Okay, that's one thing. If you just want to get rich, like winning the lottery, investing shouldn't be the first thing you go to. Investing is not games, okay? It comes with a lot of responsibilities and good life decisions. You know, if you can't even budget, then I'm sorry, but investing might be hell for you. That's what I think. Financial habits and common sense is more important than investing in general. So budgeting is more important than investing, in my opinion, okay? And why do we do this? We do this for financial sustainability because you don't want to be raking up debt for the wrong reasons. Things to note. What is the point of investing when you unnecessarily spend more than you save or invest? That's what a lot of people do actually. You know, like most people don't even realize this unless they get into the apps, get into the Excel sheets and check out their expenses and incomes just to find out they spend more than they save and invest when they can do much better in that saving and investing kind of part. So it's quite eye-opening for most people. So it's great to even try it out just to see where your expenses are going and where you can cut down and if you can make it a bit more sustainable. The classic mindset is save and invest before you spend every paycheck. Now they say around 20% is okay, but if you're earning 100k, maybe more than 20k, to be honest, you know. So that goes into the next point of lifestyle inflation. Lifestyle inflation is something like when you were able to live comfortably at 25k per year expenses, why do you need to increase it to 50k per year expenses when you just doubled your pay? You know, just because you doubled your pay does not mean your expenses should be doubling as well. It's not a really good habit. Sure, you can do that, but it's kind of going off the wealthy kind of pathway, right? You shouldn't be increasing your expenses along with your income directly proportional, okay? So that's something I've seen a lot of. You know, you can increase it a bit. You know, you can increase it to 30k, 35k, but doubling it because your income doubled is not something sustainable. Because what happens if you lose your job? What happens if you get demoted? I don't know. Things can happen in life. If you need to drop your expenses back down to 25k, most people won't be able to do that when they were, you know, already in the mindset of using 50k per year in expenses. It's not a good kind of way to do things. So just find out what your bare minimum is. You can, you know, do some splurges, do some impulse purchases, but try to keep that on a minimal and keep with what you can live with comfortably, but not too frugal. You know, I'm not telling people to be frugal, but just budget and know where your money is and just find out where you can cut down where necessary, okay? So that's the kind of things to note. An emergency fund is something that people must have, because you just don't know. As I mentioned, you might get demoted, you might lose your job, you might get made redundant. No one really knows. So you need to have at least around 3 to 6 months worth of emergency fund, which can cover all your expenses when you're out of income or at an emergency situation like medical, or I don't know, anything. It could be anything. So no one knows. So that's why you have an emergency fund. It's literally for the unexpected events. You cannot predict your future, so you got to be at least financially backed up just for those kind of situations. Another reason not to increase your expenses directly proportional to your income over time: lifestyle inflation. When these events happen, it's not easy to cut back on your expenses that you just got used to. So it's best to keep your bare minimum expenses at the low. Impulse purchases, as long as you can control them, it's okay. Every now and then does not mean every week. Alright, so budgeting is the first thing. The second thing is investing type. You need to know what kind of investing type you are comfortable with. It could be passive, active, high risk, low risk. You just got to find which one fits with your personality. Most of the time it will correlate with what kind of person you are in general. If you're a bit risk averse, then you would go towards a bit low risk, moderate kind of returns, like an ETF or a passive kind of income, dividend stocks and whatnot. If you are a bit like risk tolerant, then you might be like willing to go into meme stocks or like high risk stocks, like I know GameStop. If you were in it 1 year ago, you would be comfortable to be investing in those rather than ETFs. So this really depends on what kind of person you are. Everyone's different, and there's no finger pointing at anyone that can't do high risk investments and whatnot, because we're all built differently and therefore we all invest differently. Nothing much to this one. You just got to be truthful to yourself, and you just got to find out what kind of investments fit you. Because if you are like a risk averse person, but if you go into something like, I don't know, cryptocurrency, you'll be dealing with big volatility every day. Like you can see negative 20% overnight and you'll be like crying. I'm very risk tolerant, to be honest. Like I've been in crypto for quite some time now, and it's just, I don't have any emotions towards it. If I see a negative 20% overnight, I'll be like, oh, cool. And I'll just get on with my day. But a lot of people might not be able to do that. So it's all about what you are comfortable with. So this is the second one, investing type. Third thing Third one, fundamentals, okay? Accounting and economics basics. It's always good to know the basics of everything of what you're doing, because that's what we all do when we start something new. We start with the basics. We don't just jump to the advanced right away because you just cannot cope. But that's what a lot of people do nowadays, is they just jump straight into investing without knowing the fundamentals of accounting or finance or economics, right? Not even. Like, they just go by because it's so easy to invest nowadays on the internet. Everything's there for you. You just got to register and just start doing it. But if you cannot read a financial report, is it okay for you to buy a stock? So there's a saying that Warren Buffett talks about, is the first thing you should be able to do is read a financial report. That's like one of the first things you do when you research into a stock. You see if they're profitable or not, you know, how their valuation works with their financials. There's a lot of things to think about, and you know, you just got to know this kind of thing, because if you're doing it without it, it's like, it's gambling pretty much at this point. You need to be up to date with the news and global events. So, you know, the whole pandemic situation, the Evergrande thing as well. It's good to know these kind of global events because they affect how people invest in that live situation. Information goes around really quickly in this decade, in this generation. You know, we all got access to really fast internet, and just rumors or, you know, factual news, they all spread very, very fast. So it's good to know how to filter out what is true and what is not, and be aware of it at all times and be up to date with it. It does help with your decisions on if you want to buy or sell an investment. It's very relevant, I'm telling you. So if investing is like calculus, fundamentals like what I've just talked about is like algebra. You cannot do calculus without algebra. For people who are not really the mathy kind of person, I'm just telling you to focus on the fundamentals and you'll be better than most people already, because a lot of people don't even know the basics and the fundamentals. So that's the third one. Fourth thing, research. Okay, you need to research. This is something people skip a lot. People just be like, oh, I like that stock and I'll buy that. Oh, I like that stock and I'll buy that. What is that? What are you guys doing? You're literally gambling without prior research. It's like betting without checking your hand in poker. If you don't know your hand and you're just going all in, you're stupid. It's the same in investing. If you don't research in the stock or the investment you want to invest prior to betting your money on, you might lose it all, and it's quite likely so. Research will tell you the timings and when it is right, when it is wrong. You know, if you want to buy this, should I buy it or not? Research gives you a little bit of a hint on what the investment might do. And you know, it's like checking the financials, the trend of the financials, the product of the company, leadership team like the executive or the board, target audience and the market size they have. All these kind of things I talk about, and how to pick stocks like Warren Buffett. It's in the channel, so have a look at that. That's a video about how I research into stocks when I'm interested in one. When I'm researching, I'm normally going for two types of companies. Either a well-established company, something like Google, you know, and I'm just seeing if the current market value is well valued for Google's financials right now. If I want to buy Google, the alphabet company, right? Potential might be something like the company is not making any money right now. It's very early days for the company, so maybe it's like a startup, but does it have potential to go up and make their current valuation worth it, right? So there's two types of ways of, you know, valuing a company. It's either value or you're going for growth and like, I don't know, potential, because it's not there yet, right? So global market and trends are very good because you need to know what people are interested in, what people might buy, what people might use nowadays. These things are very important for a time like now if you want to invest. For example, if you want to invest in Facebook, is it right to invest into Facebook? If you didn't research, you might not know that Facebook also owns Instagram and WhatsApp. It's not just Facebook, and they also rebranded into Meta. All these kind of things. It's very important. And does people still use Instagram? Does people still use WhatsApp? Does people still use Meta, Facebook? I don't know. Like, these are the kind of things you need to look into trends. And what's trending right now? EVs, right? So people are talking about EVs nowadays, so that's why there was a lot of hype around EVs. There's a lot of people talk about EVs, so lithium stocks and kind of battery stocks and whatnot, those started going up as well. Energy stocks, there's a lot of things. So these are the kind of trends you want to be able to read, and the best investors normally are the best trend readers. They know what is going to be the top thing, or one of the top things the world cares about in the next 5 to 10 years, and you invest based on that. So that's the kind of things you want to do when you're researching, not just factual, but potential and trends. What kind of things can you look into? You can look into financial reports through the main market websites like NZX, ASX, NYSE, NASDAQ, CBOE, or you can use third-party software like Yahoo Finance, MarketWatch, Bloomberg, Simply Wall Street, TradingView, and whatnot. So there's a bunch of websites you can use for reading financial reports and stuff like that. YouTube videos are pretty good. People like me, we review stocks for people. We talk about our stocks, we talk about the interesting sectors in the stock market or cryptocurrencies, whatnot. So these kind of videos are really good. Just know that most people are not professionals on YouTube. They're just like amateurs like us. So just grain of salt. Always do your own research before you actually commit to buying a stock or an investment that comes out on a YouTube video. Just common sense. Books, how to invest, what successful investors look into when they invest in the stocks or other investment classes. So these are kind of things you can read through books. News and articles, media coverage and whatnot. I would be careful of media coverage because they could be misleading. It depends on who wrote it and which publisher or which company. There's a lot of things. So just know which media coverage is legit, which is not, and stuff like that. You'll get the hang of what is BS and what is true over time as you gain experience in the market. Interviews and documentaries are pretty good. So sometimes, leadership teams of a company you might be interested in might do some interviews or documentaries and, answer some questions. And that might give you a feel for what kind of company it is and what kind of people are leading that kind of company and so on. So there's a lot of research sources. You just got to know where to look for them. There's tons on the internet. There's so many people that can probably help. I can also probably help as well. So put a comment down below if you have problem researching and I can kind of show you the way a bit. But, not a financial advisor. Just know that. I don't want any lawsuits. So that's the fourth one. The final fifth thing you should do before investing is grow your patience. This is the hardest part for most people. Forget the research, forget the fundamentals. Sometimes people just lose out because they cannot wait. It's quite devastating for some people, and it's kind of sad to just watch people struggle to wait for the market to go up or the stock investment they have to go up. It's not an easy thing, I'm gonna say. But it is very important to have patience in the market. You can't check every morning and expect to be a millionaire. It doesn't work like that. For most cases, it will take years. It's not even months, it's years. When we're investing, we're normally looking at a couple of years to several years to maybe more than decades of holding period, okay? You buy and hold. That's how you should be investing. If you want to do short-term trades, you become a day trader. You're a different type of person at that point, and it's not something I could probably talk about because I'm not a great day trader myself. There's also things like swing trading, which I kind of do as well, kind of based on trends and my kind of thought process and what I'm interested in at that point in time. I sell some things and buy into another thing and buy into another sector and whatnot. So swing trading is something I might do, but in general, you have to have at least some degree of patience, right? Okay, so this is why a lot of people lose money, because they don't know how to wait. Okay, Money doesn't grow overnight. Be reasonable and rational at all times. That's very important. Emotions come into big play in the first couple of months of investing, right? Because you invested your money and you see it drop $1 and be like, oh my goodness, my money. Then the next day you're like crying over it. You're like, oh, why did I start investing? And then you start to see it go up and make a day. You know, like, you need to keep your emotions out of it. That's one way to grow your patience, because if you let your emotions run you when you invest, that's how you ruin your whole portfolio. I guarantee that. So don't act out of emotions. That's the final one. So yeah, these are the kind of things you just need to think about. I'm pretty sure there's a lot more things to do before investing, but these are just the 5 that I thought on the top of my head that might give some starting point for some people. So yeah, hope you guys liked it. If you have any of your own kind of preparation kind of steps yourselves that you went through that worked for you, put it down in the comment section below. If you liked today's video, give it a thumbs up. Put a comment down below for anything, any questions, let me know. Subscribe to the channel for more content, bell notification for my next live streams and updates, and I will catch you in the next video. I hope 2022 is the year we all make money. See ya!